Just a couple of days ago, Bitcoin was trading below 109,000. Today, nearly 119,000. A $10,000 move in under just a couple of days, right? We tested one of the most critical levels in all of on-chain analysis, what we call the short-term holder cost basis. In the last video, I said that this was basically the level to watch, the line in the sand that historically has separated the bull market structure from something else entirely. So what happened here? So did the short-term holders panic? Did long-term holders start distributing? And most importantly, what does the actual on-chain data tell us about where we go from here? So my name's Tristan. I'm the founder of chartinspect.com, and today I want to basically reverse engineer exactly what happened during this volatility using on-chain data. Thanks for watching. I really appreciate all the new subscribers and viewers. Let's dive in. So first, let me establish what we're looking at right here, basically. So this is the short-term holder cost basis. It represents the average acquisition price for everyone who basically bought Bitcoin in the last 155 days. And right now we're sitting at around $112,000. So in every single Bitcoin bull market in history, this level has acted as a very important level. And I mean every single one. So this, as long as price action has stayed historically above this level, the short-term holder cost basis, the bull market structure remains intact. This is anyone who bought Bitcoin in the last 155 days, right? These are short-term buyers, flippers, traders, etc. They're the ones buying as the price goes up, and they're selling during capitulation events. So this level can act as, basically during bull markets, it can act as support. And then during bear markets, it can act as resistance, right? So we've seen this in 2017, in 2021, when we broke below it, when we broke back above it, when we couldn't hold it as support in 2021, right? So when the price starts to dip below this, that's when we need to start paying attention, because historically, that's when market character, market sentiment starts to shift. In 2024, this cycle, we've held it and tested it multiple times, kept pushing higher, held it here, kept pushing higher. Even in the beginning of the bear market, we broke below it after the major crash down to 30K, down from 47, broke below it after 47K, went around to 28K. We broke back above it. We hit a new all-time high after we broke above it and held support, and then finally broke back below it, couldn't hold it, and then broke below and went into the bear market. Similarly, during the bear market, we couldn't break above it in that first run up for the FTX crash. And then afterwards, when everyone was, basically out of the market and anyone who was going to sell already sold. So after we broke back above it, then we held it as support and broke below it a few times, but ultimately held it as support and we kept going right. So in 2017, same pattern, right? Tested it, couldn't reclaim it, bear market confirmed, right? Here's the critical thing about this, though. Just because we touch it doesn't mean the bull market's over. We've seen plenty of healthy retests during this bull market, at least. So the question is, do we hold it or do we break through? So when Bitcoin dropped below 110, crossing below basically the short-term holder cost basis, every on-chain analysis was watching the same thing. What are these market participants actually doing, right? So let's start with the people who matter the most, at least right now. So these are the short-term holders themselves. This is the short-term holder spend output profit ratio, or short-term holder SOPR for short. It measures basically whether short-term holders are realizing profits or losses when they move their coins on chain. When this level is above 1, they're taking profits. And when this level is below 1, they're realizing losses on chain. So what we saw during that dip to 109 was basically short-term holders dropped around 0.99. The short-term holders were basically realizing losses on chain. And this is pretty crucial, not at extreme levels, right? So this wasn't capitulation. This was measured, almost, a healthy behavior correction, healthy retest. And if you compare that to basically 2021, 2022, we saw real capitulation events where in true bear market bottoms, you get sustained periods of, loss taking with short-term holders SOPR going well below 0.95 all the way down to like 0.93, 0.94, right? We didn't see that in this recent dip. We saw, a brief dip below 1 and then immediately recovered afterwards. So we can also look at this from a different perspective, the short-term holders in profit. And basically this shows the percentage of short-term holder supply that's currently in profit. So during the dip to 109, this went around 65% of short-term holders were in loss. In bull markets, when we drop below 50%, or even sometimes we can go down to 100%, it often marks these local bottoms, moments of maximum fear among newer holders. We got pretty close to around that level of around 80, 90, but we didn't break through it. We held at 65 and then pretty much bounced very hard, and we're currently at 92% of short-term holders in profit, right? So then there's another chart for specifically short-term holders. This is basically showing the net position change on chain. And this shows whether short-term holders are either accumulating or distributing on a net position basis on chain. So during the dip, we actually saw short-term holders slightly reducing positions. So some of them are selling at a loss during that capitulation event there. The story is important here, though. Some short-term holders felt some pain, yes, but some of them sold at a loss, yeah. But this wasn't, panic. This wasn't selling near bear market bottoms, right? This was just a normal, healthy retest of support. So you can see in prior cycles, when we really see a large distribution of short-term holders in loss here during periods of uncertainty, that's when short-term holders are experiencing most losses. And similarly, they're also accumulating at these much higher prices relative to long-term holders, right? Now, before I jump into long-term holders, I actually want to talk about something that I'm going to add to the website soon. These are the exchange flows. So I'll look at this one actually. So these are exchange flows. So in cryptocurrency, exchanges are kind of like public bathrooms. You use them and you get out, right? So exchanges have always been a part of Bitcoin's history ever since early days. Mt. Gox and all of the Bitstamp is one of the earliest ones too. So they've provided this backbone for allowing investors to buy and sell, move their crypto around. They've also been major reasons for downfalls during Bitcoin's history, from Mt. Gox's attack to the FTX scandal. They're most certainly controversial, but they provide this backbone. So I want to discuss the on-chain inflows and outflows for these exchanges and what information we can sort of derive from these. So it's true on-chain that when we see major inflows to these exchanges, it can typically mean that investors are taking profits, but not always. The same is true for outflows from exchanges. So what we see in red. This is basically Bitcoin holders are more bullish on the asset, and they're going out of their way to basically self-custody their Bitcoins and withdrawing it from exchanges. And this sort of dynamic shows like a shift in how investor behavior is operating at any given point in the market. And you can see that during healthy bull markets, you can see that inflows to exchanges are massively increasing, as well as the opposite for outflows when we're about to go into a bull market. These are, very high momentum shifts to the downside because holders are basically withdrawing their Bitcoin to their own wallets, right? So one way we can basically use exchange data to better identify, periods of holder or seller activities to look at these net flows. This is basically the velocity of coins moving to and from exchanges. And initially, if you don't apply a moving average, this is very volatile, right? But with a moving average, and if you also change the unit to USD, you can see a pretty clear story here. So let me apply a smoothing average here. So during all cycles in Bitcoin's history, we've seen that whenever Bitcoin's flowing away from these exchanges and into cold storage wallets, it often precedes these periods of bull market activity. When Bitcoin is flowing to exchanges, it often shows periods of distribution from holders who believed in Bitcoin during bear market lows and subsequently, are taking profits during bull markets. In 2021, we can note in the first peak to 63K, we saw extreme inflows to exchanges. But before the mania phase, if you look at on a BTC denomination, Bitcoiners were taking as many coins as they could off of exchanges and into cold storage. Long-term holders kept accumulating, and even into the secondary peak, they actually started accumulating again during the secondary peak. So, and all the way into the bear market, right? You can also see during these, this dip, we started seeing accumulation here, some accumulation here, as well as in the bear market bottom in December of 2022. So what happened in the most recent dip to this level, right? So when we apply a sort of a small moving average, we saw around a net outflow of around, I think it was around 15,000 BTC over this weekend period. So mostly accumulation and self-custody occurring at this range here. So people buying the dip and moving coins back off of exchanges into cold storage. We can also look on chain to see out of all of the exchanges, which ones are holding the most Bitcoin. Right now, Coinbase and Binance basically dominate, but we're seeing a sort of gradual decline in total exchange balances over the past few months. And in my opinion, that's pretty much a bullish sign of long-term accumulation, since we're seeing either ETF accumulators or private custody wallets into cold storage, right? By the way, this data is something I'm adding to the site in the next couple days or so. If you want any updates, feel free to check the website out. For right now, it's on my local development server. So what about long-term holders now? We've gone through exchanges, we've gone through short-term holders. So let's look through long-term holders now. These are the patient holders, patient money, smart money, whatever you want to call them. Long-term holders have been sitting on their coins for over 155 days, right? So conversely, short-term holders have only held for the past 155 days. These are over 155 days. So this is the long-term holder SOPR. So this is whenever long-term holders spend their coins and send it to another wallet. Out of those coins that are spent, which ones are in profit, which ones are in loss, right? Here's what's fascinating about long-term holders. During this entire move that we had, basically a small drop, but for long-term holders, they stayed above almost at 2 for SOPR, meaning they had a 2x realized profit on average when they moved their coins. It's still hovering very high. Long-term holders were taking modest profits, but nothing aggressive, nothing that we've seen before in 2017 and 2013 and 2021. No panic distribution, basically. This is really important because in healthy bull markets, long-term holders don't necessarily panic on these dips. They've seen, these moves before. They've seen that movie before. They know $5,000 moves are just noise in the bigger picture, right? So we can take this a step further and look at their long-term holder net position change. So this is whether they're reducing their holdings or increasing. And we can see that it somewhat actually increased during this small dip here. Not by a lot, but by a little. Some long-term holders were buying, but when we use a more moving average, we can see that generally speaking, we can see some offloading still occurring, not in the same magnitude that we've seen in prior mania phases, such as 2021, in 2017, and in 2013 and 2011, right? We've seen a substantial amount of distribution by long-term holders, but nothing crazy, especially not right now. We've seen it slow down quite a bit. So right now, we're seeing some modest distribution, but typical bull market behavior where patient holders take some profits on the way up, but maintain some positions still, right? This tells us sort of that the patient experienced holder doesn't really think this is the top yet. They're not rushing for the exits, right? They're somewhat comfortable holding these levels. Historically speaking, if we're looking at the 4-year cycle, Q4 has really been the time where they start to scale out. You saw this especially in 2017, right? So let's sort of zoom out onto this next chart and look at a sort of bigger picture. So this is sort of like realized profits and losses on chain. It's not unrealized profits and losses like MVRV, but actual realized profit and loss when someone moves their coins on Bitcoin. So when you buy, let's say you buy Bitcoin at 50K and you move it to another wallet, or you move it off the exchange when Bitcoin's trading at 100K. Your realized profit is 50K per coin. So we can see this happening across the entire network in basically real time and aggregated over a daily time frame. And during this sort of volatility down to 109K, we saw something somewhat interesting. So during the drop, we saw realized losses spike to around 700 million, around 900 million total if you count both of these days, September 24th and 25th. That sounds like a lot in realized losses, but it's really not in terms of the entire, history of Bitcoin, especially during this bull market here. So in 2022, we actually saw major realized losses, especially when we went down from around 48 to this drop to 15 here. We saw around 4 to 6 billion multiple times in realized losses. People were trading their coins for much lower price than what they originally had bought. People were capitulating, selling at massive losses, basically giving up. Today, we've only seen, this past weekend, we only saw 800 million in realized losses. That's basically nothing. Nowhere near true capitulation levels. And within 24 hours of that bounce, realized profits were already back above realized losses. Around 4 billion in profits were realized by coins moving on chain just today. So this tells us that the market's still in a healthy structure. We're not seeing this insane capitulation behavior like we've seen in prior bull market breaks. We're seeing normal volatility in the bull market where people are taking small losses but still remain in profit generally. This is a metric that could turn around in both quickly in both ways, So let's sort of synthesize what this data is actually telling us. So let me wrap it up here. When Bitcoin dropped to around 109K recently and tested the short-term holder cost basis that we talked about, short-term holders felt some pain, but didn't capitulate heavily. Around 15,000 Bitcoin, right? Followed by the exchange flows that we saw. It's a healthy behavior, in my opinion. Long-term holders remain calm, like we saw in long-term holders, SOPR and net position change. No aggressive distributions. Some actually accumulated during the dip, right? And then realized losses, like we just spoke about, peaked at 800 million, but nowhere near multi-billion-dollar capitulation events we've seen in true bear markets. And then Bitcoin bounced back to 108K, right? So reclaiming that short-term holder cost basis level. So what does this really mean? As long as we hold above this 110K level, the short-term holder cost basis, in my opinion, the bull market structure remains intact. We tested it and the market pretty much held it. So does that mean we're guaranteed to go, higher? Maybe. So things are looking better from an on-chain perspective. Historically, Q4s for bull markets have been outstanding for price action. No one can predict the future, but what I can tell you is that the data is showing current holder positions and behaviors to be relatively healthy in a market where, we've successfully defended a critical support level and people are feeling pretty good about that. So if we hold above that 112K it was, yeah. So 112K, the short-term holder cost basis, if this starts rising again, that would tell us, new money is starting to come in at higher prices. The realized profit and loss data would show us continued profit taking, but at manageable levels. The exchange outflows would continue, but this is a pretty much bullish scenario in my opinion. If we break below this short-term holder cost basis and start to meaningfully head down, I'd say that's entering into a different territory. That's where, realized losses would start to spike meaningfully. We'd start to see people who bought at higher prices start to capitulate. And this level of 70, 60, 70, 80K is, in my opinion, a pretty important level. There was a ton of supply accumulated at those levels. MicroStrategy's average cost basis is around like 77K. a lot of ETF cost basis, institutional buying. If we test these levels, we're pretty much, testing a lot of people's conviction. And this is another chart on the website that I'm going to be adding soon. It's the ETF cost basis, on-chain cost basis. So what coins, or how many coins and what price moved into these custodian wallets for these ETFs. And we can track this all on chain, and we can see every Bitcoin that moved to these wallets. So you can see that a lot of these ETFs have an average cost basis of around 60 to 80K. So the average is about like 53K right now. But most of the ones that were introduced in 2024 and onward were actually, or are actually at around that 60 to 80K range, right? So the on-chain data is sort of painting this picture that the market just passed a really good test. Not perfectly, but it definitely passed. The short-term holder cost basis at 110K is definitely the level I'm watching now, and you can, watch it too on the website. As long as we hold above it, I think the bull market structure remains intact. If we break below it, I'm sort of leaning on the edge of, if we can't reclaim it, that is, I'm leaning on the edge of, we're going to have to start asking these harder questions about whether the cycle is starting to transition or not, just like we did in these scenarios here. Not as much so because of the time basis that we were on here. We weren't getting close to Q4. Now we're sort of getting pretty close to where we've historically seen, these levels start to be tested, right? So all these charts are available for 100% free on the Chart Inspector website, chartinspect.com. The price level metrics are updated every hour, and the on-chain metrics are updated every day. So if you found this analysis helpful, make sure to subscribe, like, and comment what you want to see next. So thanks for watching. Bye.